Hey, it is Troy Stavros, and it is that time of the month where I come out with the latest data and the news about what is happening in the East Tennessee housing market. We are now about halfway through April, and we have all of the data in from the end of March. So let's kind of take a look and see what happened through March, how it compared to March of last year, and what we think is happening currently, as well as what's going to happen in the future. There are some different things that are popping up on this month's report that are noteworthy. So let's just jump in and start taking a look at stuff. Okay, so let's start with East Tennessee market as a whole. This is everything that's covered in the Knoxville Area Association of Realtors realm. So all of the surrounding counties around Knoxville and East Tennessee. So we're looking at year over year, March of 2023 compared to March of 2022. Home sales are down 10.6%. The big graphic on the right is March, and the graphic to the left is last month. That was the data we talked about last month. So we can kind of look and compare back and forth and see how things are trending. But last month, home sales were down 22.6%. So they're definitely trending in the right direction. Home sales are picking up. Pending sales are down 7.4% compared to last year. The inventory of homes is up 52.2% compared to last year. When we look at last month, we were up 66%. So when you look at the inventory of homes and then you look at the graphic where it says absorption rate, you can see that arrow is red and pointing down. Inventory of homes is up, but the graphic for absorption rate is telling us where things are trending month over month, like this month compared to last month. So we are losing inventory. We are not going in the right direction. Inventory is not increasing. It is decreasing, even though it is up from a year ago. 1 year ago, we were at historical lows of inventory. So it may look like we have a lot of inventory because it says we're up 52.2%, but that's just not the case. We have less than 2 months of inventory in all of East Tennessee, where a healthy market has 6 months worth of inventory. So the supply side of our supply and demand is low. The median sales price is up 6.21% year over year, so prices are trending up. Last month, our median sales price came in at $320,000. This month, it comes in at $325,000. So median list price for homes in all of East Tennessee is $325,000, and new listings are down 16.2%. Let's go take a look at the graphics for all of East Tennessee. So these are the numbers and the graphs that we look at every month and just kind of see where the lines are trending. Here is our inventory, and you can see we are trending down. Typically, as we enter February, March, April, this line is trending up because we're gaining inventory heading into the spring market. But that is just not the case this year. We are still in a decline as far as inventory goes. Absorption rate, that line just follows right along with the number of listings, and you can see our absorption rate is falling. It was back in November, it was at its highest at 2.2 months worth of inventory. Now we've fallen all the way down to 1.78 months in all of East Tennessee. And because of that, when listings inventory is down, typically that means supply is down and demand is up. Thus, prices will be increasing, which we can see with these lines over here. As we scroll down a little bit further, days on the market are starting to come down, and the sold to list price ratio is starting to move back up. We were coming down where we were getting a little bit more wiggle room with prices and negotiation, but those things are starting to trend back up where there will be less negotiation with pricing on homes. Okay, let's move to Knoxville, Tennessee, the Knoxville, Tennessee market as a whole. So this is everything with a Knoxville, Tennessee address. So home sales are down 9.3% compared to a year ago. Pending sales are down 6.9% compared to a year ago. When we look 1 month earlier on the graphic on the left, we saw home sales were down 24% last month, only 9% this month. So that is heading in the right direction. The inventory of homes is up 46.7% compared to a year ago. When we look to the graphic on the left, last month we were up 67%. So obviously inventory is falling, and we could see that by the absorption rate arrow being in the red again. That number going from just at about a month's worth of inventory last month to now below a month's worth of inventory in Knoxville at 0.93, a significantly low amount of inventory. New listings are down 15.7%. The median sales price is up 5.97% compared to a year ago. Last month, that number came in at $346,250, and this month, the median sales price in Knoxville is coming in at $355,000. I went ahead and added a new graphic to a new stat to this graphic, that being the average sold price per square foot. And in Knoxville, that's coming in at $196 a square foot average for the sale price of homes. Let's go ahead and take a look at the graphs for Knoxville and see what that is saying. We're looking at those trending lines. Obviously, here's the number of listings. We were at our highest point in October, and we have just been coming down. So inventory is falling. And because inventory is falling, you can see pending listings are increasing. So people are buying. There's obviously demand, but supply is falling. And because of that, prices are rising. Absorption rate obviously was at its highest in October at 1.39 months, and now we are down to 0.93, less than 1 month's worth of inventory. And because of that, when we look over here at the sold to list price ratio, we were having a little bit more negotiation again, just kind of like we saw in the last slide, but that is starting to thin out, and it's moving back towards 100%, which means when we get to 100%, that means on average people are paying what the list price is. And we know the good houses right now are selling at multiple offers, and more often than not above list price. So remember always, even within a local market, real estate is hyper-local. So you can have one section of town that is really hot and will be selling well above 100% and have multiple offers, where you may have another part of town that isn't as hot. So that's why it's super important to talk to an agent that knows the local market. Okay, let's jump over, take a look at Farragut. Again, we talk about this every month because there's so few homes for sale in Farragut. These numbers can jump all over the place wildly. So here's a perfect example of that. Last month, the median sales price in Farragut was $500, and it was down 13% compared to a year ago. Well, this month, the median sales price is up 14.57% compared to a year ago, and that came in at $727,500. So big difference. But the things that we want to look at in the trending numbers are what is happening with home sales. Home sales are up, pending sales are down, inventory is up, but again, absorption rate, that arrow is pointing down. We have just above a month's worth of inventory of homes for sale in Farragut. New listings within this past month were down 32.8%. When we look at the graph, the important thing to look at, let's just kind of go over to the graph here for Farragut. Obviously, we see inventory has been coming down pretty much the same as all the other graphs we've looked at. Absorption rate following that peaked in October at 1.77 months and now is down at 1.05 months. We can already see here that the sale to list price ratio is at 101.2. So this has already moved above having to pay above list price for most homes in Farragut. So keep that in mind if you're buying in Farragut and you're negotiating, that you're going to have to probably pay a premium to get something under contract. Days on the market are right around 30 days. Let's take a look at another thing that's important to look at. Let me just go to Farragut here in this graph. Let's look at the housing. The numbers that are important to look at moving forward for pricing to see what's happening are pending listings and what's happening with that pricing, as well as new listings. So here are the new listings. And when we compare the new listings, we want to say, okay, what was pricing on new listings the previous year? So in March of 22, we were at $640,000. So where are we currently? We're at 650. So that number is increasing. So that means prices aren't dropping, prices are increasing. So that's what's happening in Farragut. Also, we look at pending listings, because pending listings are showing things that have just gone under contract, either very recently or within the last month. So it's kind of showing us a little crystal ball of what these numbers are going to come out looking like in the future. So when we look in March of 2022, here we are at 707,000. Here we're at 699. So we're basically kind of right level as far as pending home prices go. But that's something to keep in mind. Actually, we can jump back and look at Knoxville and see what it tells us about the Knoxville market as far as new listing prices go. Okay, so here, when we're looking at the new listing prices, let's just narrow that down. March of 22, we were at 341,000 for new listing prices, and then this past March, 380. So obviously prices are increasing; they are not going down. Let's look at the pending listing prices. That's the median list price for pending listings. In March of 22, we were at 366. Currently, we are at 405. So Knoxville, obviously, prices are trending higher. All right, Lenoir City, we'll take a quick peek here. Home sales are down 23.7%. Pending sales are down 34.5%. Inventory of homes is up 39.4%. The median sales price is basically doing the same thing it did last month, right around 4 to 5% increase when we compare it to the year prior. So this month, 4.98%. Last month, it came in at $299,000. This month, the median sales price came in at $318,150, with an average price per square foot of $199 per square foot in Lenoir City. Again, inventory says inventory of homes is up compared to last year, but the arrow is down on absorption rate, so it is telling us inventory is falling. We are at 1 month's worth of inventory in Lenoir City. So again, that market is in need of inventory. Let's jump over there and just kind of take a quick peek at those graphs. So basically telling the same story here. November was the high peak for inventory there, and it's just been trending down ever since. I'm still not seeing that line move up like it should with the spring inventory yet. And we're going to talk a little bit about why that is here shortly. But again, supply is down, demand is up, prices are increasing. We've seen that going forward. When we go, we can take a quick peek at what's happening in Lenoir City as far as the new listing numbers. So if we're looking at new listings here, and we're looking at the pricing in March of 2022, we were at 334. This past March through 426. Prices are trending higher, not trending lower. Take a quick peek at the pending listings, and we can see let's see. Well, there must have been some big pending sales last March, which really bumped this price up. But we know from the new listings that prices are trending higher in Lenoir City. Okay, let's take a look at the surrounding counties and see what is happening here. So in Roane County, available inventory is up 22.4%. Pending sales are up 38.1%. And this is the first time in a little bit we've seen the median sales price actually drop in Roane County. It is coming in at $299,450. Last month, you can see here, it was at $299,900, so it has dropped a little bit, but dropped 10.61% compared to a year earlier. So we are seeing some price moderation in Roane County right now. But that being said, last month when we looked at the average price per square foot of sales in Roane County, it came in at $157 a square foot. This month comes in at $166 a square foot. So while it says prices are declining, homes are still bringing a good amount of price per square foot, actually more than last month. So, but that'll definitely be a number that we want to keep an eye on. If we see that number in the negative again next month, we know that there may be a trend setting there, but this is the first time we've seen a dip in the year over year for Roane County. Now we could take a look over at Knox County. Well, actually, we'll take a quick peek at the graph for Roane County. Here we go. Okay, Roane County. Again, same situation with the inventory. Prices are kind of holding steady, but we've seen, they've been kind of flat, and they've actually dipped a little bit lower this month. So that's something good to keep an eye on as we move forward. And you can actually see in Roane County, this is the first one that we've seen in the graph where the absorption rate has kind of fallen, and then it went from 1.3 to 1.32. So a little bit of an increase in inventory. So if we can see an increase in inventory, we will see prices moderate. Obviously, that's a very, very small amount, but hey, it's the first one that we've seen going up as opposed to going down. Okay, let's go back here. I'm sorry about that. Let's take a look at Knox County. Knox County, available inventory is up 44%. Pending sales are down 3.4%. The median sales price in Knox County is up 7.83% and is coming in at $352,618, with the average sold price per square foot coming in at $195 a square foot. Let's take a quick peek over at the graphs for Knox County and just take a look, see what's going on over there, if anything looks different. So obviously this is still looking the same, trending down as far as inventory, trending down as far as absorption rate. We're coming in at under a month's worth of inventory, so significantly low. Because of that, we're seeing prices increase in Knox County. The sold to list price ratio is starting to come up and bump up close to 100%. So not a whole lot of negotiation going on, especially for the good houses. You can't expect much negotiation at all. You can probably expect multiple offers on the attractive houses where a lot of people are looking at them. So be prepared to compete. Let's jump over here and just take a look at Knox County. So the new listings, so look at the pricing trends. March of 2022, we were at $335,000 for the median list price. March of 2023, we are at $374,000. So we are trending higher. Prices are trending higher. When we look at pending numbers, March of 2022, we were at $354,000. and this March we were at $395. So obviously Knox County prices are trending higher quite considerably. Anderson County, available inventory is up 24.1%. Pending sales are down 14%. Median sales price is down 4.19%. So here's another county for the first time showing a drop in year-over-year pricing. This is a drop 4.19%, with that median sales price in Anderson County coming in at $245,000. Let's just go take a look at the Anderson County graph and see what it tells us about new listing prices and how they're trending. Let me just get over to that graph here. Okay. So if we look at new listings, Anderson County, March, they were at 239, and this March, they're at 274. So while it's telling us that there was a year-over-year price, remember when we look at sold data, that is looking in the rear view mirror. When we look at new listings, that's telling us how people are pricing now and how agents and homeowners feel about the pricing right now. So this is telling us that they feel like the pricing is increasing. So that is a good sign. Even though it shows that year over year is down, this kind of shows us moving forward that prices are looking to be increasing. Let's see what the pending data tells us. Pending sales in March, last March came in at 242. Pending sales here came in at 259. So a little bit of an increase, not a lot. So it's definitely not going down. So I wouldn't be discouraged if you're in Anderson County. It looks like the last couple months may have been slower, but moving forward, right now, this data is telling us that things are moving in a positive direction. Loudon County. And the average price per square foot in Anderson County came in at $169 per square foot for sold single-family homes there. Loudoun County, available inventory is up 80.2%. Pending sales are down 18.8%. The median sales price is up a whopping 27.13%. So there must have been some big sales in Loudoun County last month. With the median sales price coming in at $403,000. And the average price per square foot for sold homes in Loudoun County came in at $216 a square foot. That's a big jump over last month. When we look over to the graphic on the left, it said last month they were at $206 a square foot. So that's an increase in $10 per square foot, which is a big jump. So that could be as a result of a couple big sales or something along that line. But we can kind of jump over and take a quick look at the Loudoun County graphs just to see if there's anything standing out to us. Okay, Loudoun County. Obviously, this number looks to be doing the same thing as most of the other graphs, trending down as far as inventory. Absorption rate peaked in November and is now at 1.67 months worth of inventory. That's low. When we look at the sale to list price ratio, it's starting to move back up towards 100%. So there's still a little negotiation going on here, but it's definitely starting to thin out. But let's just see if there were any significant sales that may have affected. Well, you can see there were 17 here. So these are our sold listings. There were 17 sales of homes between $500,000 and $549,999. So basically between $500 and $550, there were 17 sales last month. That's 10 more than there were last year. So there is where we're seeing a considerable number that's probably bumping that number up. as well as there were 8 sales between 600 and 650 as opposed to only 1 last year. So we're seeing some big numbers here that are definitely showing why that number is jumping up the way it is in the data. Sevier County, available inventory is up 75.1%. Pending sales are down 34.7%. The median sales price is down 9.97%. So here's a third county in East Tennessee where we're seeing a drop below last year's median sales price. This one dropped 9.97%. So this is the first time this year and last year, or any time since COVID, that we've seen 3 counties drop at the same time below the year over year. So definitely something to keep an eye on. But the average price per square foot of sold homes in Sevier County is coming in at $340 a square foot. That is down compared to the graphic on the left, where last month it was coming in at $356 a square foot. So there were definitely some things that happened in Sevier County last month that made those numbers jump around the way that they did. And then finally, Blount County, available inventory is up 13.9%. Pending sales are down 35.5%. The median sales price is up 23.85% and coming in at $394,450. Again, that is a big jump compared to 1 month earlier when the median sales price was only $353, and now we're at $394,450. So again, we must have had some big sales that happened this past month in Blount County. Let's jump over to the graphics and see if we can find those to help explain why that's happened. Okay, here we are. So obviously this number is still trending down. Inventory peaked in November like most of the other times, and now we're down to 1.14, so just over a month's worth of inventory all over the place, just super low inventory, which is going to keep prices rising. Sale to list price ratio is coming back up again. It was declining and then started coming up in February through March, heading back up towards 100%, so less negotiation happening. But let's just see if there were some big sales. Okay, yeah, I'm seeing them already here. There were 11 sales between 600 and 650 as opposed to 4 the year earlier. There were 14 sales between 500 and 550 in Blount County compared to only 5 the year earlier. 16 sales between 450 and 500. 3 sales between 850 and 900. 2 sales between 8 and 850, where there were none the year prior. So that's where we're seeing this big jump in the number in the median sales price. So that's why it's important to look at these numbers every month just to see what is happening. We can't just hear one number and take all of that into account for everything you're trying to understand. You have to look and see and dig deeper into the data. And this is explaining to us why that number jumped so much. Okay, well, let's just take one more thing to look at here. If you're a buyer and you're looking for maybe to get a little bit more for your money, obviously when we look at these numbers here and you just look at the price per square foot, and you look at where sales prices are down, so you might be able to get a better deal in a place where the median sales price is falling and where there is a lower price per square foot. You'll be able to get more house for your money. So just looking at this graphic, that would be Roane County and Anderson County being your 2 best bets to find something for maybe a little bit better deal and get more house for your money. Because obviously we're looking at $166 a square foot, $169 a square foot, where the cheapest in any of the other counties is $195 a square foot, and that is the average of the homes sold. So that's just something to think about if you are looking for a bargain. Okay, That was a lot of information. Hopefully that is helpful. I just want to dig in now into just some more information about what is happening specifically with the market here, what we can expect, why we're seeing some of the things that we're seeing in the data. But for the first time ever, here's something that has never happened before. So for the first time ever, the median listing price, and I'm going to show you a graphic here. For the first time ever, the median listing price in the Knoxville metro area is higher than the national average. You can see those lines intersect right here coming up on 2023. Between the end of 2022 and the beginning of 2023, you see the blue line and the orange line intersect. Well, what that intersection is where the Knoxville metro area jumps over the national average for the median listing price. That's the first time that has ever happened. So that might suggest that Knoxville's brand is an affordable place to live, and a competitive advantage that might come with that might be starting to slip away. Granted, it is affordable to live here compared to places like California or New York or some other high-cost places, but on average, it is getting a little bit more expensive to live here than the national average, as we can see from this graphic. In the fourth quarter of 2022, the median listing price in the Knoxville area was $426,633 compared to the national average of $412,743. That's a gap of more than $10,000. By February of 2023, the local median listing price was more than $42,000 higher than the U.S. average, and the 47th highest among the top 150 U.S. housing markets. So, unfortunately, it is getting more expensive, and I'm sure you're not surprised about this, to live in the Knoxville area. Okay, let's talk a little bit about supply. We'll go to this graphic in a second, but as far as supply, inventory usually climbs for about 20 weeks starting in February. We talked about this looking at the other graphs, but as of right now, halfway through the seasonal cycle, inventory is still falling. So there are three groups of potential sellers out there and potential sources of inventory that are in the market. Let's talk about those three groups and what they're doing and how that affects inventory. Okay, so group number one are life event movers. So those are people that are either moving up to a bigger house or maybe moving down and downsizing. But what we know is that fewer people are moving. They're staying in their homes longer. And this is what we call the mortgage lock-in group. And let me explain what that means. With over 60% of outstanding residential mortgages in Tennessee having an interest rate of 4% or below, prospective sellers are more hesitant to list their homes for sale given the prospect of trading out their current mortgage for one with a higher interest rate. And if you've been looking to buy, you know interest rates right now are in the mid-sixes. So people are having a trouble justifying trading out a sub-4, sometimes sub-3% interest rate that they have on their current home to sell that home and then have to go buy another house with the interest rate of just under 7%. And because of that, fewer homeowners are putting their homes on the market. And this is especially true in regard to homes priced under $500,000, where new listings are down 19% year over year. That's what this graph is showing us. If we look at this graph, you can see compared to a year earlier, when we're looking at February of 22 compared to February of 23, there are almost 200 less homes from the 0 to 299,000 range. There's almost 100 less homes available from the 300 to 500 range. A few less available between 5 and 600, and then it kind of flip-flops, and there's actually a little bit more inventory up in the higher priced range from 7 to over $1 million. But for the majority of our home buyers, those that are priced 500 and under, there is less affordable homes available. There's just less inventory. Therefore, there's going to be more demand for homes. There's going to be more people looking for homes in this price range, and it's going to just push the prices higher. There's going to be more competition, and it's just going to be harder to get in to a home in this price range. But also, even though if they have to move, here's the other side of things. Okay, so even if they have to move and they don't have a choice, some folks are even opting to keep their existing house that has that sub 3% mortgage and rent it out and then buy their new home without selling at all. So that obviously adds even more to the inventory problems, because even folks that even have to sell, some of them are still keeping their home and renting it out as an investment property. So that home that normally would come on the market isn't coming on the market. So hurting the inventory situation that much more. And then in regards to interest rates, let's take a look here and see where we're at as far as interest rates as of today. Here's today's slide. It's been bouncing around, obviously, but as of today, we are at 6.61% for the average 30-year mortgage. Just a couple days that you can see how volatile it's been, up and down, up and down. Just not too long ago, I think this was maybe a week or two ago, we were down almost to in the fives. We were at 6.16%. Then it jumped up to 6.5, went down to 6.39, and then as of today, jumped up to 6.61%. So again, people not super excited about trading in their 3% mortgage rate for 6.61%, thus not putting their homes on the market. Okay, the second group of sellers or people that might be putting houses on the market could be investors. Well, investors have purchased millions of homes in the United States across the country in the last decade. And we've seen the biggest investors, who are the institutional investors that have that Wall Street money behind them, they've dramatically slowed the amount of homes that they're purchasing, but none of them are selling. They're all holding on to these homes. So while they purchased a bunch and they've slowed down, they aren't putting those homes on the market. So that is not helping the inventory situation at all. And even right now, the other, and there's no discernible inventory coming from investors at this time. So number one, move up and move down buyers, not putting their homes on the market, not helping inventory. Number two, investors bought a bunch, but not selling, not helping inventory. Then number three, the third possible source of inventory would be distressed homeowners. Now, you lose your job, your income doesn't keep up with inflation or other economic stress that might force you to sell your home. This particular group was the source of inventory during the 2008 crisis. But as of right now, the U.S. has a record unemployment, and even the big layoffs in the tech sector are generally finding work quickly. So as of now, essentially none of these people are selling their homes either. So they're staying in their homes. And why is that? Because right now, homeowners can see that they have a really good deal in where they're at. They have a low interest rate locked in. They don't have to go out and buy a home for significantly more than they can afford to try and get the same home that they already have. So unless something dramatic changes things in the economy, we can expect this environment to remain the same. And because of that, let me just show this graphic. Lawrence June, who's the chief economist for the National Association of Realtors, says inventory levels are still at historic lows. Consequently, multiple offers are returning on a good number of homes. And we can definitely see that happening in the market here in Knoxville. We are seeing multiple offers on the good homes. It's not even a question. it's happening on the good homes. We're seeing multiple offers, and even on some of the homes that you might not consider ideal, we're still seeing competition sometimes. So you have to be prepared for that if you want to get a home under contract. All right, so that's talking about the supply side of things. And we know that home prices have to deal with supply and demand. So obviously supply is low. So more than likely it's going to push things higher. But what about demand? Is there still demand? Well, Tennessee experienced its largest year-over-year population increase since 2007 and surpassed 7 million residents in 2022, according to new census data compiled by the Tennessee State Data Center. So there's demand. People are coming to Tennessee. And I read an article just earlier today talking about some of the reasons why. Obviously, the tax situation here in Tennessee is very favorable. So people are coming from other parts of the country with less favorable tax situations. And, like we said, coming from places like California, New York, and Illinois, it's still very affordable here, even though prices are rising. And those of us that have been here for a while are like, whoa, it's gotten really expensive. Compared to a lot of other places in the country, it is still affordable. And because of that, and because of the demand, another source of demand that we can see, Knoxville experienced the second fastest rent growth of any U.S. metro area in the country in 2022, according to a report from the National Association of Realtors. So not only is the housing purchase sector booming, because obviously there's a lot of demand that way, but obviously a huge demand for rentals as well, with this being the second fastest rent growth area in the country. So again, it's very similar to my report last month. Inventory is low, demand is high, prices are rising. But at least we did see a couple counties that dipped below where they were last month. So that will be something to keep an eye on. If you have any questions at all, don't hesitate to reach out to me. I hope this is helpful. It's always good to keep abreast of what is happening in the local market. And remember, real estate is local. Don't trust what you hear on the national news. And even what you hear right here, it's important. If you're looking in a specific area, or you want to know specifically about your home, or you're looking at a home in a specific area, talk to an agent that understands the local market, because that specific hyper-local area could be completely different than what is happening in another area, even in Knoxville or in the same city or in the same zip code that you're in. So reach out. We're happy to do that work for you. We want to help you any way that we can. Let us know how we can serve you. My team and I are always here to help you. Have a great day, and we will talk to you soon.